Ladies and gentlemen, good day and welcome to Huhtamaki India Limited Q3 CY24 results conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mohit Mishra. Thank you and over to you, sir.
Good afternoon, everyone. Thank you for joining on Huhtamaki India Limited Q3 CY24 result conference call. We have Huhtamaki India management on call, represented by Mr. Dhananjay Salunke, Managing Director, Mr. Jagdish Agarwal, Editing Director and Chief Financial Officer. I would like to invite Mr. Dhananjay to initiate with opening remarks, post which we will have Q&A session. Over to you, sir.
Thank you. Good afternoon, ladies and gentlemen. With our tradition, this is a quarter 3 call. And before we start our discussions, let me start with our safe harbor statement that whatever we discuss during this call, it may not be related to any future events or financial performance of Huhtamaki as such. So with this, I'll kind of start with quarter 3 performance. As you would have seen in quarter 3, we had improvement in the volumes and net sales. Quarter on quarter, the net sale were up by around 2%. However, the margins were significantly impacted due to adverse customer mix, adverse products mix, and inflation in our raw materials. And in this quarter, the focus was more on to protect the share of wallet and market share, where the end consumer demand was subdued for various reasons. And as you would have seen, the most of the large FMCG companies have also reported the similar challenges in the end consumer demand. Having said that, we have our strategy in place to address our competitiveness in the long term and create a path for profitable growth. And we continue to drive our innovative product portfolio, driving our world-class operations, and strengthening our manufacturing and customer excellence. So we have been investing in the operations and technology, where you can see that there is a clear impact in terms of investments. At the same time, due to the certain commitments from our end consumers or brand owners, where we their sustainability goals are getting slightly shifted. So we are seeing some headwinds in the short term. At the same time, we continue to push forward our sustainability journey, along with introducing the sustainable packaging solutions, which are in line with our customer sustainability pledges, I would say, and which are very slightly delayed, but we have a strong belief that we shall find a way to get things going. So with this background, I can request our CFO Jagdish to take us through to the financials of quarter 3. Jagdish.
Thank you, Dhananjay. Good afternoon, everyone. With Diwali around the corner, let me start by wishing everyone safe and happy holidays. Diwali being the festival of lights, I hope it brings joy and happiness to one and all. I'm pleased to host this Q3 2024 investor call along with our MD, Mr. Dhananjay Salunke. And I'll take you through the financial performance for 9 months and for September quarter. With regard to financial performance, like Dhananjay said, the volumes for the quarter have improved on quarter-on-quarter basis, relatively flat when we compare with the YOY. However, volume for 9 months ended September 24 are almost flat versus the corresponding period of previous year. Revenue for the quarter stands at 6.3 billion rupees versus 6.4 billion rupees in Q3 2023, representing a decrease of 1.5%. Increase of 6.2 billion in the trailing quarter, which is almost 2% increase. On a 9-month period, the top line stands at 18.5 billion rupees versus 19 billion during the corresponding period of 2023, again representing a decrease of around 2.5%. EBITDA for the quarter stands at 313 million compared to 488 million in Q3 2023. And for June 2024 quarter, it was at 383 million. On the similar lines, the EBIT performance was, EBIT for the quarter was 191 million rupees versus 379 million in Q3 2023. And in June quarter, it was at 263 million. EBITDA for 9 months is a 1.19 billion rupees compared to 1.48 billion during the 9 months 2023, reflecting almost a decrease of around 20%. When we look at our finance cost has decreased on YOY basis. We have prepaid almost all the dates, external dates last year except ECB. And the surplus cash has been invested into term deposits and mutual funds, which is yielding a return of 7% plus. During the quarter ended September 24, we have prepaid ECB of 1 billion rupee, and with that the only debt we have in our portfolio of ECB 1 billion. Profit before tax for the quarter before exceptional items stands at 143 million rupees versus 304 million in Q3 2023 and rupees 213 million in Q2 2024. Profit before tax for 9 months 2024 stands at 707 million rupees versus 861 million rupees for the similar period last year. Similar movement in the net profit after exceptional income and after tax for the quarter is 117 million rupees versus 323 million in Q3 2023 and 385 million in June quarter. With that, EPS for the quarter at 1.45 rupee per share. Net profit after exceptional income and after tax for 9 months at 763 million rupees versus 822 million during 9 months 2023. With that, EPS for 9 months stands at 7 rupees per share. Now, it's very clear that we had seen the challenges in the bottom line in spite of relatively flat volumes and minimal movement into the top line. There has been pressure on margins due to a host of reasons, which includes raw material inflation, supply chain constraints, and sales and product mix, to name a few. Global supply chain disruptions emanating from geopolitical issues are also having an impact on the export as well as having an impact on import of certain raw material in their cost. And we believe this is a temporary blip. However, our strategic focus is definitely going to help us to drive long-term growth initiatives, and I'm sure this is going to help the company in future. When we talk about overall market and demand situations in the September quarter, in overall ecosystem of FMCG sector, from where we get most of our demand, inflationary pressures had impacted the demand across most of the segments, affecting a consumer spending, and this is having a spiral impact on overall performance of the company. Even though rural demand is recovering, but urban demand continues to be under strain. Things are uncertain, and even if demand may improve gradually, inflation may still continue, that may have impact on the margins. So there are a lot of uncertainty in the marketplace into the economic environment at this point of time. When you talk about our liquidity position, debt to equity ratio is pretty strong. It is at a 0.1 and it was 0.2 previous year, same quarter. The gross debt, when we look at, it's only 1 billion, which is on account of ECB. All external borrowings has been repaid last year. Overall liquidity is pretty strong from cash flow point of view. And there are open credit lines which are not utilized. Those are with us from a cash flow management point of view. When you look at a working capital has improved on a YOY basis as well as quarter-on-quarter basis on account of various levers and overall working capital management when we talk about with the payables and receivables and all. So while the above sums up the business performance, I would also like to take a moment to reinforce our commitment to strong corporate governance, our commitment to our stakeholders, and our commitment to providing sustainable packaging solutions. It is our belief that with a core strategy of operational efficiencies, technology-enabled innovations, and realization of value for our product in place, this will help the company remain competitive in the long run and to drive responsible and profitable growth. As always, we appreciate your continued support and investment in our company. Thank you. With that, I am handing it over to Mohit.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, in order to make sure that the management is able to address questions from all participants, please limit yourself to 2 per participant. Should you have a follow-up question, please rejoin the question queue. We will wait for a moment while the question queue assembles. The first question is from the line of Deepan Sankara Narayan from Trustline Holdings Private Limited. Please go ahead.
So, good evening everyone and thanks a lot for the opportunity. So firstly, we would like to understand more about this backward integration process of Blue Loop product in more detail. In the normal flexible packaging, basic material starts from PE. So how will it be different in case of Blue Loop? And what kind of gross margin improvement expected from this Blue Loop product?
So I'll take this question. So, look, when we envisaged our Blue Loop products, we are not only looking at a film as such, right? So we are looking at the solutions. So we are looking at the sustainable solutions, and film is one of the part of it. So the solutions which are so film, and then the barrier properties which we generate by the metallization, and then all other coatings is the part of what we offer to our customers. So when we are investing in these processes, we are investing across the spectrum of the manufacturing processes and not only in the film. So that's one aspect, and then that's where we are moving ahead in the our product portfolio, where we are offering the solutions under the various brands, and so that's one aspect. The second aspect is, yes, as these are innovative solutions, so we definitely have plans of having aggressive gross margins than the current one.
Okay, so because these are monolayer materials as compared to the non-sustainable ones which has the multi-layer material, so we save a lot of material cost in case of moving to the sustainable solutions. That is also one of the key reasons for higher gross margin expectation here?
I would say the answer is both. You know, one, as you said, yes, because we are moving from a multi-layer to a mono-layer or a bi-layer, so there would be savings in the material cost. At the same time, the materials which we had to use are basically the unique raw materials. They are sourced from a unique suppliers, and they are expensive than the current raw materials. So essentially, when there is a reduction in the overall plastic or PE content, overall cost structures are getting slightly changed. At the same, and that's the reason why we may not be able to end up passing everything through the chain. And so, what solutions which we are right now offering are basically slightly at a higher premium, but they are surely giving a lot of reduction to our end customers, which are their targets to reduce the the plastic impacts to the environment.
Okay. Lastly, so we discussed that Blue Loop contributed 25 to 27% of sales during last quarter. So what is its contribution during current quarter, and why there were not much gross margin improvement there, despite we have added value-added.
I'm sorry to interrupt, sir, but can you please rejoin the question queue for a follow-up question?
So this is the second question, ma'am.
Okay, sir, please go ahead.
Yes, sir. So the Blue Loop, what kind of contribution we had during this current quarter, and despite having 25-30% contribution, why there was not visible gross margin improvement so far?
Yeah. So as our CFO explained during his remarks, that the Blue Loop contribution continued to be around 27-28%. But this quarter, we saw that apart from the Blue Loop, there is a challenge on the end customer demand, which basically revolves around the product mix. And as you can imagine, we are the part of a chain where we have to also mimic the end of the end consumer demand. And you would have read in the newspaper that in India currently a challenge in the end consumer demand, and our customers has to really push for their product portfolio. So when we have serviced those demands, the overall product mix has kind of got adverse. So that's the reason why we could not see the visible improvement in the margin profile.
Okay. Thanks a lot and all the best.
Thank you very much. The next question is from the line of Saurabh Patwa from Quest Investment Advisors. Please go ahead.
Sir, am I audible, sir?
Yes.
Yes. So first of all, thanks a lot for giving me an opportunity to ask the question. So two questions. So one is, can you just highlight? I think in the presentation as well as press release and in your opening remarks, you highlighted that you have a strategy in place to achieve long-term growth and sustainable profits. So can you throw some more light on that? Is it largely linked to Blue Loop, or is it something more than that? It is how much of it would be from market share gains from your existing from your wallet share increasing existing customers? How much of it is from wallet in your market share gain? And the second question, sir, on the last 4 quarters. So 4 quarters back, I think we did a lot of exercise in 2 terms. One was on product rationalization, where we moved out of a lot of products where we were not making the kind of margin profile which we wanted. Subsequently, we also did a lot of work on our associated costs, which actually moved, which we had to curtail because we lost a lot of. We decided to come out of some part of revenue. So, and I think subsequently there was 1 or 2 quarters when we saw some margin improvement. However, I think that remained only for a while, and things were, so as you highlighted that margins are again coming down because your raw material product mix deterioration. So maybe you can just throw more highlight what's going wrong and how we plan to change it.
Yeah. So I think your questions are well thought through. Thank you for this. First question, our strategic intent. Clearly, it remains that we want to gain the market share, and in all the markets that we are operating. And Blue Loop continues to be a very important pillar of that. So that's clear. Okay. So, but apart from Blue Loop, there are 3 to 4 areas where we would want to focus. And as you can see that we are the global company. Overall, our sales turnover approximately 70-30 ratio, like 70% is domestic, 30% is exports. So what we are planning, of course, Blue Loop is for all the markets. In domestic market, as you know, Huhtamaki is a innovative player, and we continue to launch the new innovative products. So there, what we are trying to do is focus on where to play. That is the markets where we have a strength, product portfolios which we have a strength, and there is a demand in the market. So that's the focus right now we are creating, and that's where we have already had a certain products which are again from the Blue Loop umbrella, and that's where we will be focusing in the domestic market. And idea is basically to increase the market share and increase the share of wallet within the existing customers. That's a second strategy. First is, of course, Blue Loop. The third one is continuously focusing on our operational competitiveness. So driving operational excellence through, and as I said, you have seen last year, the first important strategy execution we did was the network optimization, consolidating our manufacturing footprint. And now we are kind of moving ahead in that internally. So there are many the operational improvement projects which we are taken in hand, and which are basically going to give us some value additions, which we will be working with our customers to kind of drive the benefits for mutual benefits. So that's the third aspect. And then continuously improving our talent pipeline, which will take us through the next phase of growth. So that's something which we are applying. So it's basically a 5-pronged approach, and not only Blue Loop, but Blue Loop remains in the center of everything.
It's a second question, sir, on your margins falling from last 2-3 quarters, despite several steps which you have taken, which you have been highlighting in last 2 calls, like product mix improvement and associated cost reduction, like employees, which the reduction in number of employees, your reduction in your manufacturing points, which would have resulted in cost saving, which were visible maybe a few quarters back for a quarter or two, but
yes. So this is where the dynamics comes in picture. That if you see this year is brought certain more challenging external market situations that the Red Sea crisis has impacted significantly the supply chain around the globe. And we, as we are global company, and initial first couple of quarters, we had challenges on outward vessel availability or so. But later part of that, we also had certain challenges for inward, right? So that's one large piece which was really impacting this year. And second is the overall, if you see in first 9 months in India, the FMCG companies are reporting, I would say, less than expected results, and that impacts us as well, right? So we are a part of the ecosystem, And as you would have seen in few months ago, one of the large FMCG CEO stating that there is no price in the market. And because there is no price in the market, what happens, the focus, even our customers also focus on the squeezing out the price in the ecosystems. And we are the part of that, so we continue to face that headwinds on that. So that's the overall situation. So things changed in this year, and then that's where we have to also change our strategy. And this year we have to clearly focus on maintaining the share of wallet at existing customers. And then we saw that there is a headwind in the new business development or adding the market share. So that three aspects kind of impacting our overall plans, what we had envisaged in 2023 and moving forward. But yes, this is a business dynamic, and we have plans in place, and hopefully we will be able to, come back.
So just a related question, if you allow, can I just chip in one more question, sir, if you allow?
Go ahead.
Yeah. So I think when from the commentary of most of the FMCG companies, it appears that the challenges are more on the food front. And so if I'm just trying to connect, is our mix also inclined more towards the food part of the FMCG rather than the beauty and personal care, and that's where we have got impacted more? Is it this understanding a bit fair, and especially including even beverages, which has also got impacted?
Absolutely. Yeah, your understanding is right.
So how do you see the things improving? What would be the key drivers, sir?
So innovative products is a key driver, and as you can see that regulations are getting changed or made, and our customers have certain pledges around their sustainability goals, right? And what we are doing is basically helping our customers, and some of the customers' pledges are getting maybe slightly delayed, and that's where the headwinds we are challenged on. So innovative product is one of our critical piece of strategy. That's where we see growth coming in.
So how much is food and beverages, just as a bookkeeping, sir, and then I'll just join the queue.
I'm not sure. So Jagdish or you have a...
I mean, normally don't go into that category level of mix.
Broadly, sir, just on a like trend basis, sir.
By the way, if you need to, then if you see Huhtamaki, we call ourselves as a food company, food packaging company. So you can then...
Okay.
Yeah.
Understood.
Food and daily essentials, okay? Food and daily essentials. So essentially that's the focus area.
Okay, thanks.
Thank you very much. The next question is from the line of Saket Kapoor from Kapoor Co. Please go ahead.
Namaskar, sir. Thank you for the opportunity. Sir, if you could just explain to us the impact of on margins on account of the decline in raw material prices. How have the raw material prices behaved, and that has led to the depletion of margin in this quarter? If you could just quantify or give us an understanding, that would be better.
Maybe I can, Dhananjay, take this question.
Yeah.
Mr. Kapoor, I think we have seen on a primary two RM where we have seen a high inflationary impact. One of is the BOPP and the other is the polyester prices. And these two RM are the key raw material for our production process, and we have seen a significant increase in the prices for these two raw materials especially.
So can you quantify what have been the price trends in percentage terms for the BOPP and the polymers? I think you mentioned in percentage terms, and how are the price trends currently?
I mean, if you look at, there is an increase of almost 10 to 15% for these two products.
Okay, and our basket of raw material consumption percentage terms में सर ये दो product कितना % contribute करते हैं?
It's a sizable, but again we cannot talk specific RM consumption per se, but I think it's a sizable chunk.
Okay, majority of the sale.
Yeah, it's a sizable chunk.
Okay. And just an understanding further here. So we are not able to retrieve the inflationary part, the gain from our customers because of the lower demand and because of the competition. This is what you are trying to.
No, it's a mix of many things. Sometimes you'll have a time lag, sometimes you'll have a spot business, sometimes your contract timing, and also there are a mix of element on that. But definitely, yes, the entire recovery is not possible into the same quarter where you have inflation.
So, sir, just to conclude for this point, first number point, have we taken any price hike to commensurate the inflationary impact going ahead, or are we, according to the market trend, continuing with the same for the ensuing quarters also?
I mean, when you look at the market dynamics, demand and supply situation, and the competitiveness in the market, so definitely we have to, go together with the market, and we have to look into our contract, and accordingly we will take our decisions on this movement, recovery, and all.
But what is the trend, sir? What are we exactly doing in terms of restoring the margins again?
So if you look at when we look at a demand and supply situation, definitely there is a capacity in the market, and demand is not growing. In that context, we have seen even the third quarter demand is not coming from a urban market, and also there is a pressure, and the competitive situation is really becoming more aggressive. Okay.
And second question is on the other expenses line item. Here also we see that the line item, I think 115 crore vis-a-vis 100 crore for Q1Q, and last year also 95 crore. So what has led to this increase in other expenses, if you could explain, sir? And lastly, sir, in terms of our non-core assets, disposal of them, what is the update? What are the assets under sale? If you could just give some color of it.
So other expenses, when we talk about, when we look at this quarter versus the previous quarter, largely it is happening two more elements on that. One is that the freight cost is high in this year, and we know that because of Red Sea crisis and all, the vessel availability, the container prices are pretty high. So that's one key element on that. And then we had some impairment on assets, and that also had an impact. So these are the two major reasons. And even we have some repairs related spend also.
Right, sir. Impairment, can you quantify?
Sorry?
Impairment, can you quantify for our benefits, sir?
It's around 4.5 CR.
4.5 CR. And for the 9 months, how much we have done impairment on assets?
No, this is for whether you talk about 3 months or whether 9 months, it's more or less same number.
Same number. Yes, sir. Please continue answering the next part.
And core assets, what we have already declared that assets held for sale, I think we are done all. So there were 2 land parcels which we have done the deal in the last year. One was for Ammannath, one was for Thane. So other than that, we have not declared anything assets held for sale.
Okay, we have concluded whatever was planned, sir. This is what you are saying.
Yes.
Okay. Thank you, sir, and Shubh Deepavali to the entire team.
Thank you. Same to you, sir.
Thank you very much. The next question is from the line of Parimal Mithani from Credential Investments. Please go ahead.
Hello. Can you hear me? Hello?
Yep.
Yeah,
can hear you.
Thanks for the opportunity. So, I just wanted to understand in terms of Blue Loop, how do you see the pricing going on? So, since we've been talking about this, is it as per your management expectation, and how it is? And in terms of...
Sorry, there is a disturbance. I'm not sure we are getting you properly. Can you repeat?
Let me know. No, okay. So, in terms of Blue Loop, hello?
Yeah.
In terms of Blue Loop, so how is the progress in terms of the product pick up in the market, and how vis-a-vis competitor are we?
Yeah. So, first of all, the investment what we have made in the Blue Loop is going in the right direction. So all the equipments are up and running. They are delivering the quality expected the product features what we I invested for. And if you see we are a globally as I would have given this in the past conference calls also.
that we have invested in different countries, similar equipments, and we are seeing that there is a good traction coming in the developed markets. Very clearly that whatever product portfolio we have on offer, and there is a clearly receptibility in the developed market, and that gives us a very good confidence that eventually we will have a further traction in India. And we have good successes in India as well in certain product categories. However, the rate at which we wanted to introduce the products in the market has been below our expectations, and the reasons were explained in the previous questions, that because those delays are due to various customers also kind of taking their time in terms of product qualification, the shelf life, and then their overall sustainability goals. But there is a positive development on the sustainable solutions adoption by the end customers, and clearly a good signs in the developed market.
Okay. And so how we fare in terms of competitors? Do they have a similar product in the market, or how are we pricing? How are we moving in terms of differentiation of the products?
So first of all, the differentiated products are clearly, I would say, first in the market. And the second is that the amount of capacity invested by Huhtamaki globally and in India is, I would say, not a single competitor had invested in such a large scale capacity. So there are two clear differentiators. One, products clearly differentiated, and the equipment, the location clearly differentiated.
Hello?
There was echo. Yeah.
Yeah. Sorry, sir.
Yeah. So both areas we are far ahead of the competition.
Okay. Thanks.
Thank you very much. The next question is from the line of Akshay Bajjate from Medicis Advisors Private Limited. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yes. So, just continuing with the question from the earlier participant on other expenses. So you mentioned that, the delta that we've had quarter on quarter as well as year on year is about 15 odd crores on the other expenses, out of which you've explained about 5 crores, right? Could you also explain the additional 10 crores? How much of that is being contributed through higher freight costs?
Actually, there are many components on that when we talk about other expenses, and if you go through annual report of our last year, you'll find other expenses will have around 20 to 30 line items. It's at a power and fuel, consumables. There are many line items on that, so it's very difficult to go one by one on that. But one of item which we spoke about primarily is the impairment, and the other would be a freight. But not only these two items, but the combination of all the expense put together, that's the overall impact we had.
No, that's correct, sir. But I'm asking specifically about freight costs. How much did it really spike by in the last quarter, and has it now normalized in this quarter?
It is getting normalized, but still it is not like the way it was probably last year, and it has some impact. When we talk very specifically, I'll say that maybe at least the impact would be in the range of around 25 to 30 million rupees for this quarter.
Understood. Okay. And do you think that freight costs have now begun to normalize? Because from what we have been reading in terms of data, there has been quite a sharp correction post-July in freight costs out of India.
Yeah, we have seen that, but again, it's very difficult to comment what will happen tomorrow. In this year we have seen there were 2-3 cycles where it went up, came down and went up in kind of situations, but looks like that it should normalize soon.
Okay. My second question is with respect to Blue Loop. So, you mentioned that Blue Loop was about 27-28% of revenues, and secondly, your domestic to export mix is 70-30. So my question is this: with respect to Blue Loop, how much of it is actually being supplied domestically and how much of that is being exported out?
So when you talk about a blue loop, or which is like a sustainable product or a monomaterial, there's not much change if you look at quarter on quarter. 25 to 27% is a range what we have in last couple of quarters. It is not that it's the number is we are talking about September quarter or June quarter. The similar number we had into many previous quarters. And if you look at the ratio of this monomaterial is more or less similar to what it was previously into the domestic and export market. So there is not much variation on that account.
Yeah, so that's what I wanted to know. With respect to blue loop, is it the similar ratio of 30-70 with respect to exports and domestic market, or is it slightly different? Because I believe, you had also articulated a plan where Indian facilities would be used to cater to, other markets as well for Huhtamaki, especially with respect to blue loop products.
No. So probably when Dhananjay was talking about, he was saying that Huhtamaki as a group have invested into blue loop into many other legal entities, not only into India. So there is a good response into other countries because into developed market, and India is also catching up on that front.
Yeah, but that doesn't answer my question, sir. I'm asking specifically with respect to blue loop. Let's assume that you have 100 crores of revenues for this quarter. Just assume for a minute. Out of the 100 crores, how much is towards domestic markets and how much is towards export markets?
The ratio
I just want to know.
The ratio is more or less similar of the overall revenue.
Okay, fair enough. I'll come back in the queue. Thank you.
Thank you very much. The next question is from the line of Jayesh Shroff from Cast Capital. Please go ahead.
Hi, good afternoon. I have a couple of questions. So, since last 2-3 quarters, we've been alluding to a term called operational excellence, and that we are moving on that lines. But if you see in terms of absolute numbers or as a percentage of sales, we're not seeing any improvement in steel cost items. So, what is the operational excellence all about?
Okay.
Hello.
So, yeah. Look, when we start this, we call it operational excellence. It is definitely, there were two contexts I spoke about, right? One is the competitiveness and second is the customer centrality or customer excellence, right? So in both ways, we are making progress. In certain areas, look, today, if you see whatever improvements which we are doing are able to take care of the inflationary trends in terms of electricity, in terms of fuel, in terms of the annual salary increases and so on, which are basically significant, right? And if you see the percentages, that's the reason why we are able to maintain that. And now, you can see those benefits getting into. So we are able to kind of mitigate the cost increases per se. Because if you see YTD basis or quarter-on-quarter basis, our volumes and the net sales have remained, I would say, similar, right? So that's the reason at this moment. So as I said,
then we've been impacted on the EBITDA. So I don't know whether we've been able to absorb. If we would have been able to absorb the cost of operational excellence.
Yeah. So EBITDA
significantly deteriorated.
Right. So that's why the previous discussions where we had a challenging customer mix, product mix, and we had to focus on maintaining the current share of wallet and market share, and that's the reason why we had to be prudent about it, right? So that's one aspect, and that's where the margins generally got impacted. The second aspect is the overhead cost percentage to the sales, and which has been kind of similar. The reason is operational excellence helping to mitigate the cost increases and flat volumes. Now, we have been doing groundwork now, and the moment we start increasing our share of wallet, market share, and net sales growth, those benefits will get, I would say, better and better.
But considering the current market conditions, that seems to be quite some distance away, right?
Can you repeat?
Considering the current market situation, every company is talking of slowdown, etc. Increasing our market share or increasing this growth seems some distance away.
So we have to be open on that front clearly, that how the market is going to shape from the future. See, look, again, India shows the two aspects, like there is a premiumization, premium products are going well, maybe mid-tier are having challenge. Again, there is urban versus rural, and now the rural demand, and then so all these things definitely we have to keep things in that perspective and take future decisions. Absolutely, you're right.
Okay. My second question is, now since we are a net cash company because of the money that we received on account of land sales, etc., why are we continuing with our parent loans? We are bleeding significantly there on account of the rupee depreciation vis-a-vis euro.
Okay, so maybe I can answer that question. So first of all, ECB are governed with the RBI rules and regulations. So there are average maturity period for any ECB repayment.
Okay.
To the extent it is possible, we have already done. That's one. Second, just to answer this, ECB into INR, so it doesn't have any forex impact to us.
Why is that?
Into Indian rupee.
No, but we will have to repay at a higher rate when we repay, right?
No. That's what I'm saying. When we have to repay into the Indian rupee. So the entire ECB account is into Indian rupee, so it doesn't have a forex impact.
Okay. It doesn't have a forex.
Yeah.
All right. Okay. Thank you so much.
Thank you very much. The next question is from the line of Yash Mehta from Art Ventures. Please go ahead.
I just wanted to ask that what is the kind of revenue growth do you see in calendar year 2026, and when do you see the margins improve further?
This is more speculative, I would say. I mean, I don't think we give a guidance on the sales growth or so for the future.
Volume growth, sir?
Yeah, that's what I think. Volume growth and sales growth is associated with each other. But at the same time, if you go on a Huhtamaki OIG website, you would get some directional figures, and that is what we are also trying to align our growth aspirations. Our growth aspirations are also aligned with the India as a country growth what's happening, and the plans are being made in that context. What I would say at this point of time is that if you see our journey from last 5 to 6 years, we had been, I would say, flat in terms of our revenue growth, and that is where we definitely want to make some move.
Thank you, sir.
Yeah. Thanks.
Thank you very much. The next question is from the line of Dinesh from DG Parekh. Please go ahead.
Hello, sir. My question is that our turnover is stagnant for last 2 years. There is no increase in turnovers at all. And we have ventured into Blue Loop, but Blue Loop is not a substitute for BOPP films, right? It may reduce the BOPP films consumption, but there is no substitute of BOPP films. Our main competitor, Cosmo Films and U-Flag, they have the backward integration plant of BOPP. Are we interested in going for BOPP manufacturing as in 2014? Huhtamaki Europe was in the BOPP film manufacturing and they have sold it. So any plan of manufacturing BOPP films in future or not?
So, definitely, you see, look, BOPP, our Blue Loop is having 4 streams, I would say.
one is monomaterial, then PP, and then paper. So very clearly, we want to have a play in each of the product portfolio. And at this moment, yes, BOPP is also contributing, or PP products contributes significantly in our product portfolio. And that's where our plan is to basically, push and introduce the PE-based products, which are as good as or better than the product which are offered currently in the market. So that's the clear plan, that we want to be a player having a play in the PE structures, largely PE, paper,